you very much for having the hearings today and for letting us speak. I'm looking forward to the October forum that's coming up, partnering with all the players here to try to find a way to make healthcare more affordable. As legislators, we can either sit up here and pontificate about why we think all of these things are wrong, or we can actually dig in to try to do something. I'm more the dig in kind of person, so understanding that we're limited, 5 minutes is not nearly enough time for me to sit down and go over these, and I did look at the rate reviews, but go over them and ask specific questions to each organization on why trends or numbers look the way that they did. So I'm going to propose some questions that I will be bringing forth to the October forum, and also be providing to DOI and in another email with all of my other questions that I've already sent. With that in mind, I am looking at recognizing the fact that increases in individual and small markets tend to be a higher impact because it's a smaller populace that we're spreading costs over. So we don't get the benefit of having large group experience to kind of make the impacts not as high. So recognizing that we're seeing the market shrink in essence, I'm wondering if reading the utilization volumes, everywhere that I'm looking, I'm pretty much seeing that utilization volumes are back to pre-pandemic normals from a claims perspective. And I definitely understand and recognize the mix is changing and that we have seen a lot of costs and claims come forward because people were not in hospitals, not getting preventive care, and specifically the spike for higher instances of cancer. I'm wondering where this is going to fall in the CSRP reinsurance market here, if we're going to see higher claims and costs related to cancer, which we know typically are going to fall within that 300,000 to 1 million claim range. Is this going to change your payer-receiver mix? I know we talked about that slightly with Cigna saying you are a 50-50 and Medicare saying you're a payer in this. Do you think that this is going to tip your mix in any way? And if so, how have you or have you not accounted for that in your rate requirement? So that's question one that I have that we'll hopefully get answers to later. Both providers that are here have recognized that there seems to be some issues with the CSRP program, the functionality of it, and the mix and spread. So knowing that this market is shrinking and the costs are staying the same or growing, have we at the DOI worked with them to dig into what specifically is driving the increase above and beyond this cancer diagnosis? If we're seeing this shift in shrinking market, higher claim costs, we need to be digging in to figure out what is driving those costs, whether it be through the all-payer claims database or whatever. And then we need to understand what industry is doing to actually mitigate those increases. How are we, as a DOI, facilitating them to provide us the information that we need to be able to price those down? Like how are we pushing down on that? I'm also very interested in how the companies are balancing their product lines, because I hear what everybody is saying, and I understand probably a lot more than a lot of the people that are at this table how all of this works, but I think it's fair to get pushback from legislators on behalf of our constituents on the questions of profitability of the entire company line and how we're balancing that as responsible members of society looking to decrease the cost of healthcare. So it's our job to bring forward the voice of humanity here, because a capitalistic market does not recognize the individual. So for us to question the profitability and the compensation packages and everything else is fair as legislators, and it is fair to say we are going to look at your line outside of just your specific line and say what is your product line mix and how is that profitability being factored into the affordability of healthcare, because it is all combined. We are all part of a machine that starts at a low end of healthcare cost, a mix with PBM, a mix of affordability, a mix of admin, and then from the fully insured market, a very highly regulated profit margin. As you've noted, a 3% cap on profit. The reason profits are so high with insurance is because of all of these things that build into that. If we can control the base of the mountain and shrink it, We shrink that level, that number, all the way up to the top. And that's the imperative piece. That's my thing. So I want to say the last thing as I wrap up is Mr. Doolittle made some very valid points. We need to partner. We need to do a better job on the whole healthcare picture, of which insurance providers make up about insurance company profits make up about, well, profit and admin, 20% of that picture of the 80-20 MLR split. We need to fully understand and educate legislators, providers, and most importantly, the public on how healthcare cost drivers impact what they're paying in premium and how we can reduce that impact. If we reduce the cost of healthcare, we also reduce the cost of insurance, and we also reduce the direct profit margin. I'd like to circle back to express that we are rightfully so digging into the rates and challenging you, the people who have come and the people who have not come because they were not invited, either way, on affordability. We as legislators, we have to be willing to take the same stance that we're taking with you, with pharma, and with healthcare providers, and network negotiated costs. Otherwise, we are doing nothing more than mouth service to our residents. If we are not willing to step up and do the same level of critical critique on those industries, we are not doing anybody any favors, and we are doing nothing more than pontificating. And I don't approve of that. So I'm hoping in the October forum, we'll have everybody at the table, and we can start to actually get down to trying to find a way to make health care affordable for our residents.